What we do as day traders, right? It's pattern recognition. We collect past market data, even though the future doesn't always repeat. It often rhymes. So we want to look at what happened last cycle. And if we come over to Bitcoin, and the reason that we look at Bitcoin, just so you guys know, whether you trade crypto or you don't, I know a lot of you do, right? It's still valuable information because this is the same across all charts, right? All charts have the same characteristics. We're just applying it to this specific one right now because what we do is we look at crypto first, and the reason being is because crypto, it doesn't have hedge funds. It doesn't, well, it does, but limited, right? They're coming into the scene now. It doesn't have pension funds. It doesn't have, all these mortgage-backed securities, all this institutional backing, like, for example, the stock market, like the S&P 500, like all this stuff. So typically, Bitcoin leads the way. When we go into a bear market, Bitcoin is the first one to show signs, which you guys are all ahead of the market anyway. But if we have a look, I was doing some research earlier, and we look at when the Federal Reserve announced that they were actually going to stop QT, so they were going to stop quantitative tightening last cycle. It was on the 31st of July, where I've marked this white line here on the chart, right? And what you can see, if we look at this, well, we actually rallied into the announcement, right? Because they were going to cut QT on this date. But then from when they actually started cutting, or they stopped, I should say, when they stopped QT, Bitcoin didn't go to a new all-time high, did it? All right. In fact, if you actually measure it from the highs, it went down another 75%. Okay. And now what I've got down the bottom, just stay with me, bear with me. What I've got on down the bottom is the Federal Reserve's liquidity. So if you can see this indicator down the bottom, it's not job cuts, it's in Asian, but what it is, it tracks the Federal Reserve's liquidity, the Federal Reserve's balance sheet. And so even though they stopped quantitative tightening on the 31st of July 2019, they didn't necessarily inject millions or billions and billions of dollars into the economy instantly. If you look at their balance sheet, right, it slowly went up a little bit, but not until the 15th of March, or the 16th of March, did they actually start injecting a substantial amount of money into the economy. And that is where you can see on the chart, we went from down here all the way up here. Okay. And from the bottom, what we did as a percentage ROI, right, is 1,550%. Not bad, right? Not fucking bad. But for context, that didn't happen for another 227 days after they stopped quantitative tightening. Does this make sense? Right, because I'm seeing a lot of guys on Twitter and Instagram thinking that, they've announced QT, they're going to start QE, they're going to pump all this money into the economy, Bitcoin's going to go to all-time highs, and they're trying to, fool a lot of people. And look, at the end of the day, I could be wrong. I've been wrong before, and I'll be wrong again in the future at some point. But I want to make sure that, I'm giving you the education that you need to succeed based on probabilities and data. And you can see why I think that this is the most likely scenario, rather than, Bitcoin hitting a new all-time high this cycle, for example. Right, and if we look at what we did, like in terms of the actual price action, let's have a look. In terms of this price action, if we just draw it out actually, from where they stopped QT, look at this price action here. This is just basically what Bitcoin's doing right now. If we zoom out and we take that to this cycle, it looks pretty similar, right? So, is this making sense? It doesn't necessarily mean just because they've announced the end of QT that we're going to start QE straight away. They're going to pump millions of dollars or billions of dollars into the economy and we're going to go on a bull run, okay? Because retail traders think we're going to cut rates in December, which we just went over the data. The Fed actually doesn't have a reason to cut rates because inflation's going up, unemployment rate's going up, all the things that they're trying to control. So why would they cut interest rates? If they do, I would expect a very small cut, but I don't think they have any reason to. Besides the point, the majority of the population is expecting that. And number two, they're not necessarily just going to inject all that, right, and have a bull run. So if we look at history and we say, well, they announced the end of QT at the 31st of the 7th, and we can, say that we probably won't get another rate cut this month, with unemployment at 4.4%, high inflation, the technicals are telling me otherwise. Well, what information do we have in terms of if we're already in a bear market, which we've gone down significantly from where we sold the top, where are we going to bottom, right? That's what people are paying me to consult for. what are the short signals? Where do we get out of positions? And where do we get into positions? Really, that's what everyone wants to know at a higher level. So let me tell you my thesis and what I've been doing a little bit of research on. So when we look historically at Bitcoin, now this is sort of the thesis, and I'll walk you through it. FYI, for the new guys, we sold at 122K live on stream at the top of the market, basically back in July. So for the last 6 months, we've had absolutely no emotion, caught the top, and we're since down from the top 35%. Now, typically what happens, if we just turn off these other moving averages for a second, and I'll leave on the 50-week, right, you can see when we break the 50-week moving average, this typically confirms the start of a bear market, all right here. This typically confirms the start of a Bitcoin bear market. If we look at what happened last cycle, we broke it here. We moved down, we came back up and retested it, and we went lower. So what I think is going to happen on Bitcoin, and potentially what is already starting to happen, is we break the 50-week moving average. Okay, we then go down to the 100-week moving average, which is where we are right now. From the 100-week moving average, typically the most likely scenario is we have a relief rally, because remember, nothing moves down in one direction. So we might have a relief rally back up to about 100, potentially 102, 105K at the most. This is where I'll be looking for swing shorts, and from this area back down, typically to the 200-week moving average, which I would call a date with destiny, because it always goes there. So if we draw that out, well, where might it be? If we just sort of project where this might be, considering it's going to be coming down, we're probably going to flatten out a little bit. And that would give us a price point at around 60K on Bitcoin, right? And that potentially might mark the bottom in terms of price for the next bear cycle. So if we look at what happened last cycle, we don't have any reason to deviate from the plan. Now, we broke the 50-week moving average here, okay? We then went down, we tested the 100-week moving average where we find support. Then we come back up, we test the 50-week moving average as resistance, we set in a lower high. Then we have a date with destiny at the 200-week moving average, or here we actually went a little bit below it, where it often represents a very great buying opportunity. So for me, my clients are asking me, well, Mitch, when are you buying Bitcoin? How we should be allocating our capital next year? When should we be allocating it? Right? Well, first of all, understand the play, understand what's happening on a higher time frame. Okay. The same thing is likely to, and I'll put it here for you. I just had it up there. Right? There's the thesis. Break the 50-week moving average, bounce from the 100-week moving average, retest the 50-week moving average as resistance, and then bottom around the 200-week moving average. Does that make sense?